Your weekly dose of mortgage news. Today is February 3rd already, and we're here with episode number 61 of Canadian Mortgage Weekly. So thanks so much for joining us. My name is Sam Thompson, and I'm joined this morning with Joe Bladek. How are you doing this morning, Joe?
Hey, Sam, not too bad. It's great to be here, as you're saying, on Canadian Mortgage Weekly, your weekly dose of mortgage news here. Episode 61, really excited to be here. Thanks for the introduction. We got a really good episode today in store for everyone, so I'm glad you're all turning in. As always, my name is Joe Bladek, and Sam, the snow, it's been hitting us hard this week again.
Yeah, that's right. I mean, it'll definitely be a morning of, digging out the car. The one perk of, working from home, or not the one, but a perk is, not having to do that first thing in the morning. I can, leave that for a little bit later, but I've definitely seen a lot of neighbors getting their snow blowers out this morning.
You bet, you bet. So with that, with the snow blowers, it's like something we always hear in the background when I'm waking up on the snow days. It never fails. We get that. It's like a very Canadian sound with all the snow blowing or going around.
That's right.
Awesome. Well, just because I love being here on Canadian Mortgage Weekly, we always like to be able to also just ask our viewers if you ever have any ideas of what you want us to talk about on Canadian Mortgage Weekly Live. Feel free to let us know in the comments below. But as always, I love to go into all the imperative stats regarding mortgage and real estate news. So Sam, why don't we really get into that this morning?
Yeah, that sounds good. It's really awesome to be able to cover some of these metrics and try and at least track sort of where the market's going, because if COVID's taught us anything, that it's quite unpredictable, but there are some metrics, again, that we track each week, which give us an indication or an idea of where the market is headed.
Yeah, and with this one specifically, the Canadian bond yield, I've been really excited about this metric. We've been following this quite closely. We've seen a lot of action since fall of 2021 with rates following suit, but then we saw some more action over the Christmas break with the bond yield falling. But Sam, it seems like lately the bond yield has just been fluctuating in a very tightening range in the most recent weeks.
Yeah, that's right. Probably for the last few weeks now, it stayed within, maybe today's rate of 1.61. And I think the high previously was about 1.69. So we're camping in that 1.6% range, give or take, 0.01 to 0.09%. So yeah, I think it's, we've seen a couple lenders start increasing their rate, since that hike. But we have kind of, leveled out at this range.
We really have, yeah. And it'll be interesting to see what happens with the bond yield going forward. I know there's some action in the stock market lately. So that usually has an impact on the bond market as well. But as of right now, fixed rates really haven't been changing since last week. So we'll keep following this metric here on Canadian Mortgage Weekly Live going forward to see what will happen with fixed rates. But I don't know about you right now, Sam, but a lot of people have been talking about rates going up this year.
Definitely has been something that we've seen, no shortage of is articles about rate hikes that are looming down the road, that we're on our way towards, higher rate hikes as we exit, or hopefully are exiting the pandemic. The economy is restabilizing. We're seeing those rates jumping back up.
Yeah. Well, with that, everyone that has a variable rate mortgage has been getting in touch with us wondering, is it still a good idea to be in a variable rate mortgage, or even if it's a good idea to take on a variable rate mortgage? And well, 1/3 of Canadians have recently been securing a variable rate mortgage. But going into the spring of 2022, we follow the CDOR rate here on Canadian Mortgage Weekly, and that's a good indication of if variable rate mortgages are a good value at the moment. And Sam, with this metric, we've been following it. It looks like variable rate mortgages still currently are a better value.
Yeah, that's right. We look at its variance from prime to see, where it is in reference to 2%. So it's still slightly over, a 2% variance from prime. But it has been a very tight range, and we have seen, actually some decline over the past, few days, over the past week or so, where, I think in a bit of a build-up to what lots of people were thinking for the Bank of Canada rate announcement, I think we were seeing that rate, the CDOR rate, slowly climbing, up from, I believe it was at, 0.45%, late in December, I believe. And we've climbed up, and it's starting to dip a little bit. Yeah, again, indicating variable rate still is looking like a good pick. I know we've chatted about before as well, the fact that the variable rate is still so low, especially if you're just getting a mortgage, that's the best time to have that low rate, in the time where your mortgage balance is the highest. Getting to pay it off with that really, really low interest is still a really smart idea.
Definitely agree to that. You can always lock into a fixed rate if you feel the variable is moving too quickly, and you can feel secure in the fact that your payments won't change once you lock in. But yeah, this is a really good metric to follow. We'll watch it next week to keep in touch with this as we get closer to the next Bank of Canada announcement. And with that, we have right here that the last one was January 26th. We had a big surprise with the Bank of Canada. We're keeping the overnight rate at 0.25%. This is a record low, as we all know. But because of this, now mortgagedashboard.ca is predicting, I think you mentioned, Sam, an 83% chance of a rate hike. So that is a massive chance on March the 2nd. So we will be watching that here on a special episode of Canadian Mortgage Weekly with our pre-rate show here on Wednesday, March 2nd, 2022, to see what happens with this rate.
Yeah, it's going to be an interesting one, because I know we had seen, that Bank of Canada overnight rate drop to 0.25% back in March of 2020. So we'll see if they keep, a 2-year strong at the same limit, that same overnight rate. It'll be definitely interesting to see, what happens, because again, on the pre-rate show from last week, we were looking at many articles, many economists that were predicting at least a 0.25% hike, maybe even a 0.5, and we didn't see it. So I think it does put, a bit of pressure, like you're saying, mortgage dashboards up to that 83% chance of a rate hike. So definitely you don't want to miss that, especially if your mortgage is in a variable rate.
Yes, absolutely. And just moving along here, I know we have a very good show planned for you all today, but with the average house price in Canada, we like to follow this metric here on Canadian Mortgage Weekly. And the numbers we have reporting are still as of December of 2021. But as of December of 2021, the average house price was $713,500, quite a significant jump from years past.
Mm-hmm.
The year-over-year change of 17.7% positive, which is pretty fantastic. I mean, that's like Canada in a whole, including all the small towns and rural areas. So we're looking at a pretty high average at this point.
Yeah, that's right. It was quite a high jump, year over year for sure. I know that if anybody was in the market, even pre-pandemic, they're seeing that home appreciation just, coming leaps and bounds ahead of when they had purchased, even in spite of a lot of people thinking, maybe the market's gonna drop, the bubble's gonna pop, all of these, different phrases that we have to try and predict the market. But it looks like it has performed very strong since COVID.
You bet. Very strong. And, these are Canadian stats looking all across Canada, Sam. So, I mean, we're living in Simcoe County. You're in Barrie, Ontario. I'm in Aurelia, Ontario. We always like to get more local statistics involved here on Canadian Mortgage Weekly. So we do have Shawna Toole joining us today from Right At Home Realty. She'll be providing us with some local real estate statistics, as well with some stats today. So, Shawna, are you able to hear us there?
Just joining now, but
all right.
Yeah, perfect. Definitely in today's market, I know that, real estate buying agents have been many people's best friends, as we're seeing, bidding wars, price hikes, to know the market a little bit better. And especially, like you were saying, locally knowing the stats and some of that market advice is going to be awesome.
Yeah, exactly. I know that Shawna has worked in the Barrie market for years, and being with Right At Home Realty, that's a pretty massive brokerage that did move into the Barrie area just a few years ago. And there's Shawna. How are you today?
Good, how are you?
Not too bad. I love that ceiling behind you. That's very nice. Awesome. But anyway, it's great to have you on today. We were just talking about the stats for Canada and how the average house price had gone up over 17% in year over year. And we're thinking that's a pretty crazy jump. But I know in Barrie, Ontario, and Simcoe County, I mean, it's been growing like bananas here as well, hasn't it, Shawna?
It has, yes. Lack of supply and demand, that's what's going on here.
Yeah, that's great. How has things been on your end this week? Have you been pretty busy with what's going on?
Yeah, it's been a good week. Good week for sure. Weather's keeping people not so much wanting to drive, but it's still busy. People wanting to get into the market, wondering what's going on. Just met with a couple just before the meeting here, trying to get into the market. They just don't feel like they can, and it's all about timing, right? Just got to be ready for it.
It really is about timing. And I know that you've had a few clients in the past that have really timed the market well. They've gotten in at a good time. And, you know, you've had a few good success stories that I've heard you talk about before.
I have, yeah, definitely, for sure.
Yeah.
A lot of them with my rent to own program that I have.
That's right.
Purchased,
And that's,
you know, a few years ago, and they thought back then that the price was high at 400, 425, and now they're closing, and their price on their closing is only 5, but their house is actually worth about 8 now. So
amazing.
They're extremely happy people, and looking into getting onto maybe another real estate investment. So they've done very well, starting off with, you know, how am I going to do this, and not being able to do it on their own. So chose rent to own, and you know, now they have $200,000 to $300,000 in their pocket.
Yeah. Wow, $200,000 to $300,000 in the client's pocket. That's unheard of in a rent to own program, because usually the rent to own programs, the investor's making the money, not the client.
Right. Well, that's there is a lot of programs out there like that where it's all about the investor 100%.
Yeah, but it looks like in your case,
it's win-win for everyone. Everyone here has to win, but the rent to own clients are the ones that seem to be coming out the big winners.
That's great. I know you and I have worked on a few before where, you know, you had put a client into a rent to own program, and sometimes they're able to buy out of the program earlier than the term. Say the rent to own length is 3 years, 4 years, because of the equity appreciation and the way the market's been. We've been seeing a lot of those clients be able to buy out their contracts 1 or 2 years in. Yep,
absolutely. And the reason for that is because what we projected the house to be worth in a couple of years, nobody could have really seen the increase that we did. So we only increased the house by 5-6% roughly. Well, when the house increased by 17 to 20%, there was all that equity left in there that you, Joe, could take and say, okay, well, there's more equity in this house than that you're buying. So that looks like a better down payment for them, really, and kind of in a different way. And so they qualify a lot sooner.
They really do. And what I'm also seeing is that these folks that are qualifying, they have all of a sudden all this equity. So they have a big decision. They have some options at that point. Once they get their house in their name, they can either continue living there, or, you know, if it works out shortly after, they can do some improvements, sell it for even a higher price, and you can get them to move on to even like their second home at that point, maybe the bigger home that they need for their family that's growing.
Yep, absolutely. And that's exactly perfect situation for one of my clients. They were just having young children when they started the program. You know, here we are 3 years later, they're closing on it. They're making around $300,000 profit. They're actually not going to be selling the house, but they're going to take the equity from that house and buy a bigger house for themselves and rent out the first house. And they've just started their real estate profile.
That's fantastic. Yeah. And they were able to start early just because, you know, even though they couldn't get into the market themselves, they got into the market with the rent to own program that you're able to offer, and just be able to build some equity that way right from the very beginning. Right
from the beginning. And they looked at it like this. Yeah, they had to put around 3% down instead of, 5% plus closing costs plus all this that the investor pays for. But they looked at like this, the rent to own when it came to the rent was going to be about $2,400 a month, depending on who it was. And out there just to get a rental was going to be the same amount. The difference between renting and a rent to own and renting, just renting, is that a portion of that amount is actually put into a savings account for you to purchase it in the 3 years time or 4 years time or however long the rent own is for. So not only are they saving part of the rent, but they get the gained equity that happens while they're living in it. And if they're handy in any way and they do any improvements on the house, then those improvements are only for themselves, because the bank is going to appraise that house at more money because of the work they did, instead of them renting it, doing the money, and then getting a U-Haul that they have to move out of. And that landlord that they just rented off of, they got to reap the benefits of the hard-earned work that the tenant did. So it's a win-win.
It is really a win-win. And that extra savings that goes in every month, that is for their buyout in the end. But it just happens that the equity is there as well. That's growing and accumulating. And in addition, we're seeing those clients have that savings that they're getting on a monthly basis, as well as that equity appreciation. So it's been a very good situation for the clients that you've put into this program. I have not seen any not be able to buy them out. From the ones that I've seen, they've all been able to at least at some point be able to buy out the program, which is really good. And from what I understand, it's not only Barrie, Ontario that you're working with clients in, right? You're working in Barrie, Aurelia, as well as Midland, as well as Angus. You're kind of all over Simcoe County.
Yep, absolutely. And actually I go beyond Simcoe County. I've done a couple up in North Bay, Sudbury. It's all about finding the investors I'm very picky on. So it's about finding the investor that will go out to certain areas. The banks aren't really keen on ones that have well and septic, but we're working on that still. But yeah, I go as far as I need to go to help renters become homeowners.
Yeah. Oh, that's really great. And we've seen that here. Shawna's really been able to take a lot of folks that have been able to either almost qualify for a mortgage, but not quite, but still be able to put them into a program, or even clients that, as of today, maybe they might not be able to qualify for a mortgage because of their financial situation or their credit situation. But we've worked together to be able to improve their credit and improve their financial situation. So once they get into that rent to own program, when they're coming out of that, they're coming out of that program as stronger, financially savvy folks that are able to take the house into their own name and start building equity. So it's a really good program. And what I wanted to know, Sean, is do you have any stats that we can share with folks today about how prices have been changing in the Simcoe County area or the Barrie area?
Yeah, absolutely. Well, I just actually on our board today, the historical sales price trend actually is one of them. It takes us back to 2017.
Okay.
From 2017 to 2019, there really wasn't much of a flux in the pricing. Roughly around the 425 was the average house sale.
425, yeah.
Now we're sitting here January 2022, and the average house sale is $825,000 in the Barrie Simcoe County area. So that's a huge jump in 4 years. Whereas you saw 3 years, not much, a little bit, not much. Then we have average price again, going fluxing. This is what people don't understand. A lot of people, they're like, well, we're waiting for the market to go down in price. The market, it does this. It does sometimes, but as it's doing this, it's always climbing. So the trends that we're seeing right now is that this isn't over. This hike is not over. And I think we're going to see probably another maybe 10% increase by the spring. So the problem is right now, though, is that supply and demand is, I'm not sure if you can see this, but this is a chart.
Is that the supply chart?
Yeah, so here we are.
Wow.
Okay, so, and this is like Hamilton over here, but this is the amount of listings on the market. And so there's not a lot there. There's not a lot of people that are putting their houses on the market. And the fact that materials have been hard to find, and even just take this winter alone, where houses are slowly, getting underway. There's not enough supply for the amount of people we have that want to buy, which means the only thing that means is that houses are going to continue to rise in price. And the more it takes for, if anybody's even recently been at Home Depot, you know how much the cost of everything just got up, outrageous, which means the cost to build a home is a lot more than it was maybe a year or two ago. And that's also affecting prices. So the trend is right now to expect another about a 10% hike in what's out there. Supply does not seem to be increasing. There's very, very few homes on the market, which means when their one does come up, we have several buyers. So you want to get yourself pre-approved and ready to go, because putting an offer in with tons of conditions is just not working. You're not winning the bid. Doesn't matter how many offers you put in or how high you go. If you have a lot of conditions in there, you're just not going to win. So you try to get yourself as much pre-approval as you can. Maybe even when you're looking at the house, have somebody with you that can maybe check out the house with you, electrical, things like that, turn on the taps maybe, to make sure everything's good. And just kind of some of those tidbit things to know, take your time and look at the house thoroughly, because if you're going to bid, you don't want to guess, because you don't get that second chance. Chances are, people are going to come in with firm offers.
Really good advice here. And looking at that average house price in Barrie from $425,000 to $825,000 in this month of January 2022, with a projected 10% increase going forward, which, on an average house price, that's another $82,000 in Barrie. That's a whole extra income that is being made just from owning that house.
And just in a short few months. Just in a short few months. That's I've got several charts here. Here's another one. This is just showing how we're going.
Yeah, well, so we see that
and
spike there.
10.
But as you say, it does go up and down. We do have that fluidity of it going up or down, but it's eventually over the course, it does trend upwards.
Yes.
But so
absolutely.
With regards to being pre-approved, that's absolutely something we recommend as well. Getting all your credit and finances checked up ahead of time. So when you meet with Shawna, that you're ready to go and you can put that offer down and you're solid. What I wanted to ask you is, what I'm noticing a lot of areas in Ontario is that a lot of houses are listing for this price, but they're selling for this price. So what's the variance? Are we looking at, do people offer 10% more usually in Barrie area, or 20% more? That $825,000.
That's the magic question, Joe.
That's the magic question. Or is that where someone like you comes into play and you can really help with that negotiation, and should the clients just talk to you directly about that?
Well, this is you know what, there's not one house the same. Believe it or not, I've seen people take a $10,000 less of a price just because it's a firm offer over one with a condition. But my rule of thumb is this, especially in markets like this. If you're the only offer, then maybe try $5,000 or $10,000 less. Make sure the realtor you're working with or myself, we do the comps to know what has sold. And just because the next door neighbor sold for $100,000 more doesn't mean this one's worth that. There might be some issues with it. The neighbors may have, better renovations or something might be there. So just make sure you do the proper comparables in that actual area of the home. That's your first thing before you start the offer, to know what you're getting involved with. And then when you're bidding, as the offers are going in, if there is an offer date, that the agent is on a program now that we get told when we put in an offer, it has to be registered. Now we get told how many offers so that nobody can be in the dark. It's almost like an instant email or a text to your phone saying we have that 1, 2 offer, 2 offers registered, 3 offers registered. Okay. So right up until, if the closing of the offer date is at 4 o'clock, you're going to know right up to 4 o'clock how many offers were submitted. Then you know how many you're up against. So if you wait closer to the very end, and your realtor then will know, okay, You're not the only person in here. We're up against 10 other offers. You're going to know to back out and to say, you know what, we're not going to get it. Let's try another one. Or my rule of thumb is to go up is a $5,000 per offer. So if it's 500,000, for example, let's go to 505, 510, 515, 520. That seems to be what now. There also are, agents out there that know the house is worth 800,000, but they're listing it for 6. And they're getting a major bidding war where you have 30, 50 offers because there's more people that have been pre-approved for a 600,000 than an 8. So when an agent sees something come up for 6, they're all over it. They have, several clients looking in that price range. But we know just looking at that house all day long is worth 8. Yes. So that's when my scenario is not going to come in to effect. That's when we have to say to our clients, well, I'm sorry, but the agent has listed this way low to get a bidding war. This is worth 800 based on my comparables that I've seen that sold. So don't expect to get this for 6 because it's worth 8, and then go from there. If that makes sense.
That makes sense. So it not really cut and dry as I was hoping, but at the same time, it does seem like there are a lot of houses out there that are priced under what they would sell for, and buyers need to understand that when they're looking at realtor.ca and then they're calling you, that if they qualify for 800,000, maybe they should be looking at houses that are priced up to 7 or 750, just so they're not too disappointed, right?
So that we know we have that extra buffer if we need to. So if they're pre-approved for 8, chances are in this market we're not getting it for 8. So let's go a little bit lower, because if you see something at 8, think of it as maybe being 850. Mm-hmm. And then, so you're right. If we look at, if you're pre-approved for 8, but let's look at something around 750, because of that extra bump we're going to have to probably go to get it. We don't want to disappoint, and then people just get frustrated and feel like there's no way they're going to win. But if we look at it in a different way to say 8, okay, let's look at 750. Well, then we have a better chance.
That's perfect. Well, thanks so much for all that advice today. I'm sure that anybody watching this episode, whether or not you're getting to the market for the first time or looking for a creative way to get in the market, definitely contact Shawna to talk about the rent-to-own program that she has. Shawna you can reach her 705-241-4663. I think, Shawna, that's your direct line. Mm-hmm. And you can also reach Shawna via email at Shawna Toole at rogers.com. And with that specifically, if you have any questions for Shawna, feel free to leave a message on the comments below, or send us a private message, or share or comment or follow this show if you like the video. Shawna, thanks so much for joining us today. I appreciate you taking the time to share these stats and just get that information out to all the viewers today. And we'll make sure that we get this out there to anyone looking for a creative way to get into the market.
Okay.
All right. Well, thanks very much. For now, we'll have to introduce our next episode, which is episode 62 next week, which will be unique side hustles, different incomes that we can use to qualify your mortgage, which is something going on with the theme for today, which is creative ways to get into the market. Mm-hmm. And Sam and I will be doing that one next week, and on Thursday at 11:30 a.m. And Sam Thompson is a mortgage agent with us for almost 2 years now. Sam originally moved here from Ottawa, Ontario, and great to have you today, Sam, on this show.
Yeah, thanks for having me, Joe. And again, for anybody who doesn't know Joe, Joe's been in the industry for over 11 years as a mortgage broker, so definitely knows all of the tricks and tips around creative income. So yeah, stay tuned for next week's episode, where we cover off, again, some of those creative ways that we can look at income to help you qualify for your mortgage.
Awesome. And thank you again, Shawna, for joining us today as well. Mm-hmm. We hope you all have a great day, and we'll see you next week.